Hey guys, Akil Stokes here. Welcome back to another midweek markup video. Today we're going to follow up on one of the trading opportunities that we looked at in the weekend video, a trend continuation opportunity on the Aussie Canada. We're also going to talk about EST, entries, stops, and targets, and how to go about figuring out if it's a good trading opportunity or not. Now, I'm going to start off by sharing with you some live footage from our live trading room, a breakdown that we did this morning, and then I'm going to follow up at the very end and update you on the trading opportunity since the market has moved since that initial recording. Now, before we get started, last warning probably, make sure you sign up for our Bridging the Gap 5-day free online trading workshop. Getting a lot of questions about will it be recorded? The answer is yes. Obviously, you're going to get more value if you can attend live and participate. But if you can't, or if you just want to review, we will be mailing out the full recorded session each day after everything is wrapped up. But you have to be registered in order to get that recording sent to your email. So I'll put a link below where you can register, and we'll hop into the live room recorded footage from this morning on the Aussie Canada. Aussie Canada here on the daily, right? And again, Canada, Aussie, I should say. Short Aussie, a lot of continuation setups here. You can see clearly, right? I think this is one we talked about as well in the trading edge video. You can see clearly that we broke a level of structure, right? You can see that VS1 level, the bigger one, the purple one, was violated. So again, resetting our process, IPDE, identify, predict, decide, execute. We can clearly see that we violated that previous level of structure. That's our identification. And we can then predict that we're likely to continue lower, right? We had a level that we're shooting for lower 4. So there's still room, should still meat on the bone here. And now we're waiting for our reason to get involved. And you can see that what we did was we got a small pullback. I took a losing cipher here, 2 weeks ago? Bullishly, right? Going against the grain. But we had a small pullback here. We put in the new structure low, fresh break, and now we're back for another pullback, and it's a deep one right near the previous pullback highs, right? So we go down to a 240, and right, you could see the sideways consolidation, right? We came down and we did the dance, la 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 la, and we broke down, and now we're right back up to that level, right? We can see the RSI was extended here on the 4-hour as well. We're currently holding at structure, right? And something that I would like to see, for me personally, is a lower low, lower close, right? And if that lower low, lower close doesn't come like in an extreme fashion, that will give me a very nice reason for entry. Because ask yourself this question, right? We haven't done this lesson in a while, even though we do it every day, but I haven't spoken about it in a while, right? What are the 3 things we need to know before we ever take a trade? This is the part of the decision process before executing. What are the 3 things we need to know before we ever enter a trade? EST, right? We need to establish these 3 things. Well done, Akil. Yeah, nice. Entries, stops, and targets, right? So you know your entries already, right? That's in your trading plan, right? You know whatever you're looking for, that's your entry, right? Stops. Obviously, stops can be different for each person. I think a lot of us in the live room here use very similar stops. Or do you guys all use ATR stops? Anyone use anything different? So if we're using an ATR stop, I'm going to bring my data box up. It's going to be somewhere, right? Our ATR of our most recent candle is about 26. So you can start measuring these things out in advance and saying, okay, we're at 92.70. 92.70 plus 26 is going to be 92.96, right? Now, if you're able to, we spoke about this on another pair, right? If you're able to, is 92.96 a good place to have stops? No, it's not the best place. I think if you can, if you're allowed to, some people are not. I would get above that 93 even handle. Right? I'd give yourself 5-6 more pips and get above that even handle if you can. But we can measure that out after we see this move right here. Right? So, targets. Now this is where things are going to vary, and I forgot who I was talking to about this, but There are targets. So entries are pretty easy for me, right? Stops are pretty easy for me. Targets are where things get a little bit different as far as skill goes. And when I say easy for me, I mean easy for me as far as like teaching, right? Because my method of target taking is, I call it think like the other trader. So it's basically reverse analysis, right? I basically want to do analysis, and I want to ask myself the question, where do I think price is going to go? So it's not my targets aren't like 10 pips, 1 pip. It's actually doing the work, doing analysis, and predicting where do I think price is likely to go. And it's a dynamic way of target taking, I guess you can suppose, or you can say. It's not as mechanical as saying like I always take targets at 1 ATR or 2 ATR. But I think with each price action trading scenario within this type of trading style, with each scenario being dynamic, I think you need to have, or I prefer to have, a dynamic way of taking targets, right? I don't want to put myself in a position where I leave too much meat on the bone, or I take a target profit that's 1 ATR, but there's like a million more pips of open opportunity. I also don't want to take a target profit where I kind of overshoot my prediction, right? So what I mean is this, right? If I'm using, let's say, an ATR based target, and it puts me right here, well, if my prediction is that price is going to continue to the lows, right? I've left all of this open target area, right? Same thing. If I have a target thing where I use, let's say, a 5 ATR, just random numbers, right? And my target profits are down here, kind of like we talked about in, was it silver? The silver scenario, right? Is this a smart place to put targets? Well, maybe not if I don't think price is going to go here. So I want to have something more dynamic, and I think it works in two ways. It works for the individuality. Yes, I nailed it. Individuality of each trading opportunity. I would say more importantly for the psyche. I told you guys the reason that I used to trade a mechanical system. What was it that? The Big Mo I used to trade. I don't think a lot of you guys, Tony may know it. The Big Mo, OG remembers that. And it was a good strategy, trend trading strategy, trend following strategy. One of the things I didn't like about it was the fact that it was 100% mechanical. And sometimes there were trades that I didn't agree with. That was one thing, but I was okay with that because numbers make sense. But sometimes there were targets that did not make a lot of sense for me, where I would look at the market and I'd be like, man, I think we're going there, and that's it. And then the target would be a lot lower than that, and the trade would end up going to where I thought we'd go to and reversing, and I'd leave all this meat on the bone, right? All this potential profit left on the table, end up taking like a break-even trade and asking myself like, man, like crap, Akil, I should have won. And mentally that bothered me. And I slowly, it put cracks in the armor. I slowly started losing confidence in the system. And what do you think that led to? When you get those cracks in the armor, those small cracks, like a small crack in the glass, the windshield, it gets bigger and bigger and bigger, and it eventually led to psychological meltdown. Yeah, mistakes. Because I was no longer trusting my system. It was like a relationship where you lose trust. Maybe you're still together, but it's not the same, and it's like only a matter of time. You've been there. Hopefully you haven't. Some of you guys have been there, where the trust isn't the same, or maybe friends, and you're like, you're just a little bit hesitant, and it makes you second guess everything else, and that's not a really healthy way to live. It's definitely not a healthy way to trade. So I think more importantly than just being dynamic for the sake of price action and opportunity, mentally, I'm 100% locked in on whenever I take a target, I don't care if it wins or loses. I am fully confident, right? I put a quote out this morning from Mark Douglas. I forgot, one of you guys shared it with. We were talking on the chat over the weekend, and we were talking a little bit about trading in the zone. And one of you guys shared the quote for me. I put a typo in the thing, and the internet is mad at me because of it, which is another issue, right? Being consistent has nothing to do with winning or losing trade, right? And we know this basically process over outcome. This is what we preach. I'm 100% secure with the process. Outcome doesn't bother me. Does not bother me. Now, I got yelled at for losing a trade instead of losing. And just on a quick side note, when I hate the grammar police, I used to have this guy on Twitter that there's a grammar police Twitter handle, and all they do is, I think it's automated. They just find grammatical errors and yell at you, right? Here's the thing I always hate, right? So if I misspell a word, but you clearly knew what word I meant to spell, you get the point, right? Nothing to do with trading. But if you were to read this, and it's funny how the human brain works, right? If you read this just by the context that it's in, you would just assume it said losing instead of losing. You would read it as losing. No one would say with winning or losing a trade, right? You go winning or losing a trade. Oh, he spelled it wrong. But you get it. But there are people out there that's like, oh, Keel, you spelled losing. You knew what I was saying. Don't take it too seriously. I'm a trader, not a writer. And to shift blame, I just copied and pasted this from the chat. So whoever shared this with me in the chat, they're the ones that can't spell. I just copy and paste it. I was just being lazy. So it's their fault, not mine. Raymond says, when I describe it to people, the faith you must have in your plan, I sound crazy like a faith leader. You're a cult leader, man. You're a cult leader. People don't get it. You don't get it until you get it. But once you get it, you get it. That's the thing. You don't get it until you get it, but once you get it, you get it. It's I don't know any better way to put it. So back to target taking, right? So for me, again, I'm not a trend following trader, so my targets go at the lows here. Someone was writing targets earlier. You can write that in again. My targets go at the lows here, right? So I can tell right now what the risk reward is going to be, or have a good idea of what the risk reward is going to be if there's a good chance of me hitting targets here, right? So good trick. Learn this from Jason Greystone because he's good at making things simpler. Is take my Fibonacci retracement tool, right? I require a 1-to-1. I know where my stop's at. Again, I'm going to default and push this a little bit higher. And this is a trade it's high on my radar. I shouldn't say that because I probably jinxed it. But take my stop loss, take my target, and I know that as long as we close this lower low lower close, which is what my first chance of entry is, as long as we close above this 50% mark, I have my 1-to-1 ratio. I can take the trade. Make sense? If we don't get it, then I go to my second strike. It's that simple, right? I go from, okay, boom, this way didn't work. What's the next option? Now, you have a lot more room if you're someone looking for the extension, right? So we talked about on the daily. Let's go back to the 1 day. We're going to take a break in a little bit for this women's 800. I'll probably take we'll take our normal 13-minute break. But we know in the daily we have room to go. Here are the closes of this little area right here of the wicks. Again, it's 191 level. This just should sound like a broken record because we've been eyeballing this for seems like a year, really like a couple weeks. Let's say that's the level you're shooting for an extension. Again, going back to our toolbox, right? We could take our Fibonacci extension tool, look for some confluence, our most recent swing high, swing low, bada boom, bada bing. Ooh, baby, baby, ooh, baby, baby. Look at that. I say it again. Ooh, baby, baby, ooh, baby, baby. 127 right at that level. So another decent level if you're shooting for an extension, you can shoot for targets there. That's going to give you a risk reward that's going to look, again, we don't know where that close is going to be, but a lot better. Make sense, guys? Something like this. Let's see if a thing Mo can take this gold. She's a monster. So it's a few hours later and 1 4-hour candlestick later here on the Aussie Canada, but The golden trading opportunity that we were looking at this morning ended up being a non-trade, and I'll tell you why. As a matter of fact, this perfectly follows up on the conversation that we had in the weekend video about rules, right? Consistent analysis plus consistent execution equals consistent results. And one of those topics, and the topic that really kind of, I guess, spurred the video, was a trader saying, I don't need rules for entry. Well, here is where having rules for entry can save your bacon, right? What I was looking for was a double top. Now we have very specific rules for what a double top needs to be in order to be valid. And you can see here on the 4 hour and even down on the hourly, we violated those rules, right? In order to have a double top or a valid double top, we cannot close above this initial level. For you guys that are new, a double top is it's when the market goes up like this. Is when we get a retracement, when we get a secondary top before rolling over, right? So one top here, two tops there. And this second top needs to not violate the first top. Now you can see here on the hourly, we have a higher high, higher close. So that's not going to be a valid top. On the 4 hour chart, same thing, a higher high, higher close. So it's not going to be a valid top. So because the double top was my reason for entry and we did not get the double top, I cannot enter the trade. Now, at this point, I don't know. This thing can still rally down and I can feel bad about not entering it. This thing could rally up and go to the moon. Only thing I know right now is that this is a good trade, or rather a good non-trade, because I followed my rules. And that has to be the most important thing, right? Process over outcome, process over outcome, process over outcome. Have a process, stick to that process, value the process. The outcome doesn't matter. Understanding that if you consistently follow that process, then you'll consistently get the results that you deserve and the results that you will desire. When you can make that the most important thing, you no longer worry about the outcome of how this trade is going to turn out. You're excited just to follow your rules and not to make a trading mistake. So a good opportunity here of good analysis and a trade that I really wanted to get involved in, but guess what? Rules wise, I can't. And if you're going to be a trader for any long period of time, you're going to deal with a lot of these. Just like the dollar Canada we looked at the other week, or we talked about in the live room as well. I didn't show you guys the footage here on YouTube, so you have no idea what I'm talking about. But just like that pair, you just have to reevaluate. So right click, remove drawing tools, go back to the drawing board, look for the next opportunity, which we know is going to be a potential head and shoulders here. And then if that opportunity comes to fruition, if our rules are met, then we trade it and we start all over again.